This is the spread between Bitcoin and Ethereum volatility, because this gives us a really good sense of what the market cares about, right? What's the driver? Is it alts and Ethereum, or is it Bitcoin and the digital gold narrative, right? They have two very different narratives that are pushing them and driving them, right? You could kind of think of Ethereum as the tech play and the innovation play, and Bitcoin as the safety play. Get me out of the fiat monetary system, digital gold type property. So we look at the spread in vol between these two assets to get a feel for what the crypto market cares about and what is the asset that they think is going to move the most. Because if that asset is going to move the most, it means it's probably the thing that's kind of driving. It's either driving the upside because, you know, the innovation or whatever it is, or it's driving the risk side of things. The market's really worried about the space for whatever reason. FTX scandal, you know, Luna debacle, all that stuff. You know, that is not good for the ecosystem, and Ethereum was really just melting down on all that stuff, right? So this kind of helps us kind of get another look under the hood of what's going on in crypto markets. So I track the term structure of this spread, which basically means for all the different expiries that we look at, what is the spread between Bitcoin vol and Ethereum vol in that time bucket? So, you know, this term structure will have, this spread will have a term structure. Sometimes the front end will be one price, but then the long end will be a completely different price for whatever reason, right? It's based on the flows in the market in different maturity options, right? It might be that the long end options, everyone wants to buy Ethereum calls because they can see loads of upside in the long term, but in the short term, no one's got a clue, and they just think we're just going to follow whatever Bitcoin does. So then the spread might be really narrow in the short dates, but the spread might be really wide in the long end, because there's this view that Ethereum is going to re-rate over time for whatever reason, whether it's the supply deficit, the fact that the tokens are getting burnt, it's a deflationary asset, whatever it may be, and people are positioning for that, but they're using longer term options to do that. So that's something we track pretty closely, and it gives us an incredible amount of insight week on week, and that's why we do it. You know, when I used to trade index options full time at the investment banks, I used to do something very similar. I used to track the most liquid index in Europe, which was the Euro stocks, and I used to then measure every single index against the Eurostock vol. And I would look at the term structure of the spread of every single index to what Eurostock's vol was. And sometimes they would blow out, and sometimes they would come back in, and they would trade in some sort of mean reverting range. And that would guide me as to whether the vol was cheap or expensive at any point in time. And obviously the realized spreads were something you had to keep an eye on as well, because they were guiding you as to where the implied spreads would go. So these are vol arb techniques that professional traders use across all markets. But I've just now applied them to crypto markets because I also trade crypto vol, right? And this is certainly what the crypto vol funds are doing and what they're looking at. And you can see realized vol we've got in the dotted line here as well. So we can see where the realized vol is and compare the term structure. Where is that compared to the realized right now on a 10-day and a 30-day basis? Then we've got the history of this spread. So this is kind of what the spread is right now for the different time buckets. So if you were to trade options in Bitcoin versus options in Ethereum in a certain maturity, that's the vol spread that you would have. Now we look at what the vol spread does for 1 week, 1 month, and 3 months, what it has done over time. So what is the time series of that vol spread to get a feel for where that vol spread trades? So looking at, you know, this has got a period of June 23 to December 23, let's say, and it shows you that, and the most volatile time series is always going to be the weekly. That's the one that's the most volatile. So you can see at the highs, it's traded to 10 vols over for Ethereum, and at the lows, it's pretty much done the same at negative 10 vols, which means 10 vols over for Bitcoin. So it trades in a plus or minus 10 vols range. And if we go to the 90-day, maybe the range is a bit narrower. So this gives us a feel for what is the range of this vol spread. And then we can say currently, where is it trading in that range? So if I look at the 90-day, for example, it's trading at about 7 vols right now. Then where does that lie in the 6-month range? Well, actually, it's quite near the top of the range. So you can see this yellow line here is quite near the top of where it's been for the last 6 months. Now, if I was to zoom out and look at 2 years of history and go back even further, then I would see that actually 7 vols isn't that expensive, and it could go as high as 20 vols maybe if it wanted to, if Ethereum really got moving again, because we've seen that happen in the last couple of years. So again, you need to kind of have some context about where the vol spread trades, what the ranges are, and what's kind of driving things. And last year, clearly, we had a lot of realized coming out of Bitcoin. Bitcoin was the narrative. It was the driver because of all the Bitcoin ETFs. When BlackRock came out and said they were doing an ETF, then you knew the game had changed and Bitcoin was in the driving seat. And that's why implied vols in Bitcoin generally traded at a premium in 2023. All right. So that is the relative value, and that's a big part of what I focus on. And it helps identify opportunities for me if I want to do switch trades where I might buy vol in ETH and sell vol in Bitcoin because I like the spread between the vols. And that will be a way for me to position not just from a directional perspective, but also from a vol perspective.